These are the keys to making 2023 your best year yet with respect to money. Hello and welcome back to Practical Personal Finance, the place where you get the information you need to understand and succeed with money. I'm your host, Andrew Scheer, and yeah, it's been a minute since I've uploaded a new video. Having a baby and adopting a puppy in a span of less than 6 months will do that. But alas, I'm back and ready to help you kick your finances into gear with 6 money moves to make in 2023. We're covering everything from banking to insurance to investing, so stay tuned. First up, think about changing your bank. Interest rates on savings accounts are actually crazy right now. The prevailing rate as of this recording at some major players in online banking like CAP, Discover, Marcus, and Ally is 3.3%. If you have an emergency fund stashed away that's just sitting there waiting for a rainy day to come along, why not make a few extra bucks while rates are up? If, for example, you have a $15,000 emergency fund, you could be earning $41.25 in interest on that money every single month. It won't make you rich, but that money could easily cover a streaming service or a phone bill. What about if you don't have a fat emergency fund to earn some extra interest on? Should you still think about switching banks? Yes, especially if the bank you're currently with is charging you a monthly maintenance fee to keep your account open. There is no reason in 2023 that you should be paying a monthly fee to do your banking. If so, you're getting ripped off. I hear from friends and family members all the time who do their banking with Chase, Bank of America, Citi, and Wells Fargo about how they need to pay a fee every month if they don't keep a certain balance in their accounts or if they don't use their debit card enough. Between local credit unions and online-only banks, there are too many good options out there to be paying monthly fees for the ability to maintain an account. Ditch the big bank and find one that truly values you as a customer. End rant. Second, shop your auto insurance. Every year or two, and especially when I see my monthly premiums go up, I spend some time getting quotes from different companies for auto insurance. All of these different companies are essentially selling the same exact product. So it only makes sense that I should shop around to find the best price among the major carriers. Would I go through the trouble of switching just to save a few bucks a month? Probably not. But if I can get the same exact coverage and save, say, $25 per month, heck, that's $300 over the course of a year. At that point, it's probably worth my time to change things up. When it comes to the major auto insurance carriers, I found State Farm and Allstate to be consistently more expensive, and Geico and Progressive to offer the best value for your money. Your mileage, of course, may vary, depending on your driving history and location. While you're shopping your auto insurance, shop your renter's or homeowner's insurance too. If you change your auto carrier, it's probably going to make sense to change this other policy as well, so you can take advantage of any bundled discounts. The way I would do it is start with the auto policy, and if there's a possibility you might switch, have the new company quote you for the renter's or homeowner's policy as well. That way you can have a complete picture before making any changes. Third, if you have any consumer debt like credit card balances, car loans, personal loans, or student loans, come up with a plan to pay down that debt this year so you can become debt-free. Start by listing some information about each of your debts, such as who you owe, the amount you owe, the interest rate, the loan term, and the monthly payment. Then aggressively work on paying down each debt one at a time while continuing to make minimum payments on the rest. Which debt should you work on eliminating first? You can start with the debt with the smallest overall balance, or the one with the highest interest rate, or the one with the highest monthly payment. Commit to paying some amount greater than the minimum each month toward the debt you select. When you finish paying that first debt, use the extra cash in your pocket each month to pay down the next one on your list. By the time you get to the bottom of your list, that last debt won't stand a chance. This is the method I used to pay off over $175,000 in student loan debt in less than 2.5 years. And being debt-free was then a crucial factor in then being able to purchase a home. You want to quit renting and start building some wealth? It all starts with getting in control of your income by being debt-free. And becoming debt-free starts with a plan. Fourth, commit to making an advanced monthly spending plan for each of the next 12 months. This is where you spend about an hour at the beginning of the month planning out what you expect your income to be that month and where you expect to spend that income. Certain expenses are fixed, like your rent, internet bill, or auto insurance. But you get to choose how much you're going to spend eating at restaurants, having fun on the weekends, and buying birthday presents for family members. It's like going grocery shopping with a list and sticking to it versus without a list, grabbing whatever looks good in the moment. If you make a list in advance, you'll come home with what you need. But if you go to the store without a game plan, you'll come home with what the store wants you to buy, unhealthy food with a big markup. When you choose how much you're going to spend in advance, it gives you the freedom to say, no, that's not in my spending plan this month. Fifth, if you're debt-free, commit to depositing a specific amount into a retirement account each month. This could go to your 401k at work or to an individual account like a Roth IRA or a traditional IRA. What's the ideal amount to set aside in your retirement account? A good rule of thumb is to aim for 10 to 15% of your income. So if you earn $5,000 per month before taxes, aim for $500 to $750 per month added to your retirement account. If that seems like a lot of money, then start small with $50 to $100 per month. Every dollar counts. When you get a raise at work this year, don't make any lifestyle changes. Instead, put that extra money in your IRA. The most important thing about saving money in one of these special retirement accounts is that they're tax advantaged. Any money you deposit into a 401k or a traditional IRA is tax-free money. You only need to pay taxes on it at withdrawal when you're older, retired, and presumably in a much lower tax bracket. Any money you deposit into a Roth 401k or a Roth IRA is taxed today, but it's tax-free, including any growth from investments when you pull it out in retirement. There's no tax advantage for depositing money in a savings account at your bank. It's a great place to keep an emergency fund because you can access the money anytime you need it, but a terrible place to save for when you're older and no longer have the ability or desire to work. Finally, make 2023 the year you finally start that side hustle or small business you've been dreaming about. The fastest and most effective way to achieve financial freedom is to be your own boss. And for the record, I'm not talking about being an Uber driver or an Instacart shopper or an MLM salesperson. Sure, all of those allow you to set your own hours and work as much or as little as you want. But at the end of the day, you're still out there busting your butt for someone else's business. What I'm talking about is leveraging your talents, skills, and passions and adding value to the lives of others. If you love taking photos, start offering photography sessions or selling prints of your work. If you enjoy building things out of wood, rebuild some of your favorite projects and offer them for sale. If you know how to make delicious pierogies, look into what the requirements are to start selling them by the dozen at a local farmer's market. My point is that you probably already have the skills and abilities you need to start a side hustle and turn it into a small business. I'm not saying to go out and quit your job tomorrow, but why not take the first steps toward making the dream of financial freedom a reality in the next 12 months? What have you got to lose? What are you planning to do in 2023 to take your finances to the next level? Let me know in the comments. Personally, I'm looking forward to continuing to create that spending plan on a monthly basis and to moving my emergency fund to one of these high-interest online savings accounts. If you're interested in learning more about how you can start your own business with $0, then click right here. And if you're not yet a PPF subscriber, click right here. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.